No, no, that's interesting. So let's talk a little bit more about the actual product. And you mentioned you had some really, you sort of designed the product, the insurance product that you're launching in Illinois based off a lot of these conversations you had with fleet owners and drivers. So at a high level, talk about what is the actual insurance product? What does it cover? Who does it cover? And how does it work?
Yeah, so it covers all of your mandatory insurance needs for whatever state that you're driving in. So Illinois is our first market. So we cover your bodily injury and property damage mandatory coverage limits in those states. So the coverage that you need to get the vehicle registered and continue to be in good standing with the DMV there.
So that's sort of my normally right to drive in Illinois. I would need personal insurance. So you guys take that.
Yep, correct. Yeah. So, and then the other components of that are, so there's also mandatory coverage in Illinois for uninsured motorists. So those are two things. Like if you get a policy through us, you're going to walk away with at least those two coverages. But then we realize there's a lot of optional coverages that some drivers want, some may not care about, or some may need to think about a little bit longer. So the obvious one is kind of that first party cover, right? Your vehicle's in an accident, and we're gonna cover that and get it back on the road and repair it. So that's known as full coverage, right? Comp and collision. And so a lot of drivers, you finance a vehicle, then you have a contractual obligation to get that insurance. Everything else we offer, though, is kind of up to you as a driver, but we see a ton of value in it. And so I kind of talked about one of them a little bit here, which is the if you're in an accident. I think you'd brought it up, right? Right now, it may be completely out of our control with supply chain issues, whether or not you're going to get that part for your Tesla or some vehicle that maybe has been out of stock for a bit or is in large demand. So you may be off the road for 3 weeks, not because it's taken us a long time to resolve the claim, but just we're waiting for that part. So we have a loss of use component that you can add on, and it pays you up to $50 a day. You can use that for whatever you want, right? If you want to go rent another vehicle and start working, great. If you're like, hey, like I make 150, I know I'm only getting a third, but at least all my other expenses are taken care of, and I can kind of do something else part-time. Just like a little bit of a salve, I guess, right? If things are taking longer. So that was
it's like a nice emergency plan, basically, right?
Exactly. Yes, we knew drivers were going to want that. Another big thing that the drivers really requested was buying down the deductible on the TNC, right? So like I'm in an accident while doing an Uber or Lyft ride, right? So we cover the non-rideshare part, right? So the technical term is P0, but like it just means like I'm doing personal driving. Like I said, it's what you need to get the vehicle registered in the state. If you're giving a ride or on your way to pick somebody up and you get into an accident, the standard deductible for Uber and Lyft right now is $2,500.
Right. So super high. A lot of people are always, unfortunately, like shocked because most personal is 500 to 1,000, right? And so it's like you're driving for Uber and Lyft, these multi-billion-dollar companies. You don't really read the fine print, as you might imagine. You get into an accident, even if the other person's at fault, you're still $2,500 deductible to start, right?
And I mean, it's just unfortunately, like given, a lot of rideshare drivers cannot afford that. And the number of drivers that I've seen just exit rideshare because of that is more than I like to think about. And so what we've done is try to say, hey, like, how can we make this more manageable for you to get that down to that 1,000 or that 500? So we have a TNC, it's called TNC deductible buy down. It's just an optional coverage that you can put in. And again, like really tries to make life a little bit easier should you get in an accident and it is your fault.
Yeah, that's smart. So if I have stable insurance in Illinois where you guys are starting and, I get into an accident, just, period zero, right? Would me just be driving around, obviously you guys would cover me because that's personal driving. But when I start getting into the, period 2 or period 3, when I'm with a passenger, right? Uber and Lyft typically cover that period. It sounds like with you guys, that's the case too, but they have this high deductible. So if I get into an accident with a passenger in the car, normally I'd have to pay $2,500 deductible to Uber or Lyft. But with you guys, I actually have the option. I would now be able to buy that down. So I'd still go through Uber and Lyft's insurance, but you guys would cover some of that $2,500 deductible. It sounds like that's pretty cool.
Exactly. Yeah. Just, and again, trying to get you back on the road as quickly as possible.
Yeah. All right. Very cool. So we've got the buying down the deductible, the loss of use. So definitely sounds like you're kind of hitting on a lot of the pain points. Anything else around the product that you guys have launched or that you learned from talking to drivers about their issues with insurance?
Yeah, I think what we've seen in general, so we collect a lot of data to make this product work, which I haven't really gone into, but whether we're collecting data from the dash cams or the telematic devices in the vehicles, we're also collecting data directly from the platforms themselves, to put into use from an underwriting perspective, but also to understand like when they're off platform versus on. we actually like we price heavily on the fact that you are doing a lot of rideshare work. So we calculate that, exactly. We know when you're on or off of the platform. So when you do a renewal, what we try to do is say, hey, like, we think you're going to do this amount of personal driving, and thus adjust accordingly. And sometimes that's quite a substantial saving. So it's really the use of all that data to try and price the policy more in line with the actual risk that's taking place, rather than the old way it's been done for a long time. And this isn't a bad way. It's just with a lack of data, that's why actuaries exist. You're trying to like figure data points out from a lack of information. We have all of that data. We may as well use it within our policy. What we've also realized is there's a lot of ancillary benefit we can give to drivers because of all this data we're collecting. So we give out daily earnings reports. We try and collate that across the different platforms that you're working on, just to give you some insight.
Very cool.
We're continuing to improve that product. Profit and loss reports. We try and understand like what kind of vehicle you have, what the gas mileage is, what expenses might be associated with where you are in your part of the country. Just, it's not an exact figure, but I think it's our start of trying to offer more of an analytics type value. And our whole goal is to build up more of a suite of services for drivers like this. Again, because of all the data we're collecting, we may as well try and offer these free services that are kind of tangential to what you're working on as a rideshare driver.
Definitely.